What if I told you that the Denver real estate market isn't what you think it is? Prices aren't really climbing, sellers don't have all the power, and new construction might be the riskiest move you could ever make right now. In this video, I'll break down the 3 biggest lies being pushed about Denver real estate and show you the data behind what's really happening. So whether you're buying or selling, you don't make decisions based on headlines. If you're new here, my name is Landon. I'm a local realtor here in Denver, and I help people find the right home in the right neighborhood, whether you're buying your first place or your forever one. All right, let's jump into lie number 1, the so-called price increases that you've been seeing in the headlines. So the headlines have been reporting higher median prices in 2025 compared to last year. And here's where the lie starts, right? Luxury closings that have happened in high volumes and high amounts have actually accounted for a lot of the increase in average price. And so it looks like, you think average and you think, yeah, that's just the whole market across the board. But it truly is being carried by the luxury market right now. And anybody that's in the business or has bought or sold a home recently will tell you that it feels like prices are coming down, especially in certain categories. And we've talked before about this, but condos, townhomes, and then that price point between about $650 and $900. That's where we're seeing the biggest dips in pricing right now. And you've actually seen a few of those recently that have gone anywhere from 2 to 6% down in the last 6 months since the spring market. And so it's been a steep decline in some of those areas, and it all has to do with affordability right now, with what's going on with people's budgets, the average price in Colorado, and how 70% of the market can't afford that average price with where interest rates are. Now we've seen interest rates start to trickle down here. They've gone from 7.25% all the way down to 6.39%. And with where they're at today, it's getting a little bit better, but it's still high compared to what most people can afford in their budget. And so most buyers are waiting until that number starts with a 5. And once it does, I think a lot more buyers will enter into the market and gobble up some of the inventory. But as of right now, it still feels like a buyer's market. And most of the buyers that I'm working with, most of the time we're coming in low. We're asking for some closing costs to be covered by the seller. We're asking for a buy down potentially, in a lot of cases, for the seller to buy that rate down a couple percent. And we're also asking for inspection items to be covered by the sellers. And not just your standard ones, but we're asking for a lot of the other items too, such as HVAC that's just old, maybe, wiring or an electrical panel that's just old. Anything that's experienced a class action lawsuit, we're asking for those things to be replaced, and getting a lot of this stuff done most of the time, compared to your averages where you may knock off a couple items on the list of 6 to 8 items, but sellers aren't budging on the other ones. Where in this market, if we ask for 7 or 8 items, we're usually getting 7 or 8 items, if not a little bit less than that. But it's very, very advantageous for buyers right now in those inspection negotiations. So the average home value as of September of 2025 is $716,000 in the entire market, which numbers show that's up 1.16% from last year. But again, the luxury market is carrying that upward. And then the other thing is, it's just a lagging indicator, right? The real estate process, once you begin to list your home, and then it's on the market for an average of about 50 days right now. So that's almost 2 months plus a 30-day closing. That's a 3-month window, right? And we just went through the summer lull, which is about the 4th of July through Labor Day. And that's when we lose a little bit of ground in the market most years, and especially this year with where interest rates have been. And so we probably won't see the numbers on that, the results, until November, December numbers. That's when we'll start to see the effects of that. And so those numbers will get more real as we approach the end of the year. But right now, it's a lie. They're a little bit inflated. When you break it down to detached homes, $796,000 is your average price, and condos and townhomes is $446,000. I've had a number of market analysis that I've done recently where comps in the springtime were $50,000 or $60,000 over what the comps of July and August sold for. So those numbers will absolutely become more true in the coming months. 1/3 of all listings, 38%, saw price cuts over the summer. That was the leader in the nation of all markets. Over 300 markets tracked. That was number 1, Denver, 38% price reductions. So if you're a buyer, don't panic about headlines saying prices are rising. The discounts are real if you know where to look. And for sellers, you can't lean on median price headlines anymore. What matters is how your home compares to similar properties in your neighborhood, not what the luxury market is doing. So stop pricing your homes too high. And that leads right into our second lie, and that is that sellers still hold the power in this market. So there's been a narrative in the media, just because the average price numbers are not really showing true numbers yet, that sellers still hold the power in this market and that homes are still selling quickly. And on average, you guys, if you look at 40% of the homes that are listed are lasting for 60 days or longer on the market. Okay. Does that sound to you like a seller's market? I don't think so. It's definitely a buyer's market that we're in. And the biggest indicator of that is we have 12,600 homes still on the market. And so when you look at that, 12,000 homes is that balanced line where economists say buyer nor seller has an advantage. And so anything above the 12,000 listing mark is a buyer's market. And you couple that with affordability issues the buyers are having right now. And, the leverage that they have is obvious if you are in the market right now, which we are every day. And so trust me, as I see things happening and negotiations play out, buyers are getting the better side of things. So don't buy into that narrative that sellers still have leverage. Also, if sellers still have all the leverage, why are builders offering 4% and 4.5% permanent buy downs? That doesn't happen if sellers are in a leverage market. When builders were in a leveraged market back in 2020, 21, they were raising prices every 2 weeks. And you would go, it's frustrating as a buyer because you'd go check out a lot, see it, get excited about it. And then the next week you were outpriced. You couldn't even buy the house because they had raised prices after their sales meeting. That's not happening anymore. We're seeing those prices come down or stay flat, and then offering more and more incentives on top of that. So definitely another glaring indication that we're in more of a buyer's market right now, based on feel, not quite based on numbers. Also, days on market have gone up, 6 days on average compared to days on market in 2024. So if homes are lasting longer, right, the buying pool is smaller, and 35% more sellers than buyers in our market, that's clearly a buyer's market right now. On top of that, inspection concessions are back in a big way, and homes are sitting on the market for about a week longer than they were last year. The truth is, buyers have the leverage right now. If you're buying, you should be pushing harder in negotiations because the data is on your side. And if you're selling, you can't expect bidding wars or multiple offers above asking price anymore. You need to price your home right from the start and make sure that it's prepped and presented well, because buyers have options and they're not rushing into deals. I've seen buyers get closing cost credits, inspection repairs, and even rate buy downs from traditional sellers. Things that were just unheard of a couple years ago. Sellers who don't adjust to this reality are the ones sitting on the market for months. And that brings us to our third lie, which is the most dangerous myth out there right now for buyers. So builders are leaning into their sales pitch right now, and they're telling you that brand new means better deals, no headaches, and it is all about the interest rate. You guys, they're pushing the fixed interest rate of 4 or 4.5% right now down your throats. But oftentimes buyers are not thinking about all the things involved. I just had a recent experience where a buyer bought one of our homes that was in a community in Sterling Ranch, where there were new construction homes just down the street from where we were. And they looked at both options. They looked at our resale that was only 5 years old, that already had solar, already had a full backyard done, about $30,000 in landscaping, including artificial turf. They already had blinds, automatic blinds with remote throughout the whole house. They already had a lot of the upgrades, including like little unexpected extras, like a feature wall, shiplap wall, patterns throughout the home and designer features. And they looked at all of that, and then they considered the new builds as well. And their perception was the new builds were actually going for like $60,000 to $75,000 more than what our resale option went for. And that's before you even count all the additional costs involved that they would have had to incur after they closed on the house. So they ended up buying our listing at around $625,000 instead of a new construction home that was the same floor plan, same model, same size, for about $675,000. And if they would have bought that home, they would have put another 20 to 30,000 in landscaping in, probably another 5,000 in blinds. And, they would have been out the door around 710,000. So it may not be the best solution, right? If you can get a resale for much, much less. And new construction buyers in our market, they want the high ceilings, the open floor plans, upstairs laundry, all of those things are incredibly important to them, and they're not willing to compromise on any of that. But even to someone like that, I would even recommend looking at homes that are only 5 years old to see if there's anything that still makes sense, that has all of those features, but it's already got landscaping, it's already got blinds. You could possibly do a 2-1 buy down, right? To get the rate down 2% for year one as rates continue to move. That may be a better option overall than paying a higher price for new construction and having to do all that work after you move in. Also, the farther we go in time, higher property taxes are on new construction, the higher HOA fees are in the communities most of the time. And, builders have to inflate their costs because of the cost of materials with tariffs. And that's starting to take effect now. You're seeing some of these upgrade costs just don't make a whole lot of sense to do it with the builder. And so those are all things to consider when you're looking at new construction. The premiums often don't hold once the incentives vanish on a lot of those upgrades. So, on a resale, if you put certain dollars into your home in the right places, then it'll come back to you. On new builds, when the builder's doing it, sometimes they'll inflate their costs and it doesn't hold in the market. Also, the other thing is, when you're walking through a model home, it's perfect in every way. It's got every upgrade imaginable. It's staged to perfection. And so the emotional appeal is on an all-time high. And so a lot of buyers get sifted away by that in certain ways compared to, buyers who are looking for more value-based, and they see a resale that, maybe 5, 10, 20 years old, but they see the potential that it has. And, some resales are staged, some aren't. And so, there may or may not be that emotional appeal. But if you're a buyer that can look through that and you can see, the end game to, wow, if I buy this house here and I put just a little bit into it in these areas that I want, then it could be worth this. That may be a better strategy. Just looking at property taxes alone, you're looking at an average of around $3,500 for the average, single family home in our market that's a resale. And, the ages of homes in our market, we have a ton of homes built in the 90s, right? So that's kind of thinking about a home in that time frame. Whereas with all the new projects, the new mill levies that they're assessing on these new construction communities are like 1.2 to 1.4% of the value. So if you buy a home at $800,000, you're going to pay 10 to 12 grand a year in property taxes on that thing. So just be aware of that. That's a cost that is probably not going to go down as we go forward. It's probably going to continue to go up. And so you just need to be aware of everything that you're getting into as far as new construction goes. Also, I've had a few clients who've had just absolute nightmare scenarios with warranty issues. I've had one client that worked with a builder who had over 100 warranty meetings with the builder after the home was built because of all the problems that were coming up. So be aware, a brand new home should be in great condition, right? But it's not every time. And so doing an inspection, making sure that you're scoping it out and not just, trusting the warranty process in a lot of those cases is a smart thing to do prior to closing. I've seen buyers pay a premium for new construction only to realize a year later that a resale home in the same area offered better value without the hidden costs. Resale homes often end up being the smarter long-term play once you factor in HOA fees, upgrade packages, and the fact that new construction premiums don't always hold up. And if you're a seller competing with new construction, you need to know this too. Builders are throwing everything at buyers to get them in the door. So if you want your resale home to stand out, you've got to invest in updates and staging. Otherwise, you're going to lose buyers to the shiny new builds down the street. This is the biggest myth in Denver real estate right now, and it's the one that can cost buyers and sellers the most money if they believe it. So those are the 3 biggest lies about Denver real estate right now. Let's wrap this up with what it means for you moving forward. The truth is, Denver's housing market isn't what the headlines say. If you want the real numbers and a strategy that works for your situation, let's talk. My info is below. Call or text me anytime and I'll walk you through what's really happening in your price range. And if you want to see just how far sellers are going to get deals done, check out my next video, why sellers are giving up in Denver right now. Click on it and I'll see you there.